I think ARB's one was like, wow, this thing, what a run, I mean, from reporting, we've seen that, yes, costs are rising and we're seeing a bit of margin pressure. But I'd say that, it's too early to tell, the interest rate rise effect flowing through. The only thing that's really affected so far is the lack of guidance. So let's talk more about it next reporting than this reporting. I think it's probably too early.
Yeah, okay. So we'll continue to keep our eye on all of these reports that are coming in. When it comes to companies that have already reported that you think are worth buying, what comes to mind? Tim, let's start with your buy.
Well, I'll start off by saying, the situation now, it's a bit scary for the next 12 months, and so companies that can hold their earnings are going to see a bit of love, and the companies that can grow their earnings, they're going to get a nice premium here. So for us, our buy is CSL. This is a very non-discretionary medical products company. The fact that it recovered from its lows to here is a no-brainer, right? But it's the next step here where we think that they can really shine. So they reported net profit after tax was down 6%, which was in line with consensus. That's fine. Plasma volumes were materially down. We understand that the COVID lockdowns in the US really affected them, and the US being a key state for them. They guided for FY 23 a net profit after tax between 2.4 to 2.5 billion. And the CEO said, look, we think we can provide strong, sustainable growth. And we think they can. We absolutely think they can. When I think about CSL from its revenue, 70% of revenue is from blood-related products. So we're seeing that natural increase in supply as households are under pressure. So collections are up a good 24% in 2022. But then as COVID rolls out of hospitals, all the elective surgery comes back as well. So that's one of their biggest boons here. Vaccines, about 40% of revenues, that'll just naturally kick up. But for us, the one we like is the Viafor acquisition, which should account for about 16% of revenues. Their guidance was before this deal settled. And, they did that big capital raise for it. We think that this adds some really good growth potential. They bought it at a good price. They bought it at a good time. It will probably add about $500 million of net profit after tax this year alone. We could see a 15% growth rate out of this company. So for us, CSL, healthcare will probably be good here. It has another breakout here. We place CSL on a P of around 35 times, but on an EV/EBITDA basis of 22 times, that's not bad for a growth stock.